Okay, ladies and gents, we'll get started in a moment. What are we looking at today? A bit of a bid across equities, 250 up on Dow. Russell not doing too bad. Don't tend to watch that so much. Nasdaq lagging for a change. S&P a little bit lower. Well, a little bit of a lower lift than the Dow, not lower at all. Still green on the day. Yeah. So Dow leading the pack. Russell second. SPY coming in third, and the Qs or Nasdaq bringing up the rear. But all eyes are on yen at the moment. Yen is obviously with the news and stuff coming out overnight. That's been spicy. Tesla's really still struggling. Bitcoin, of course, and even Bitcoin traders in there's probably a few. All right, we'll get rolling in a second. Let's let everyone join, and we shall get started on this, which I think you're going to find valuable. I like this one. I think this is something that's practical, it's useful, and kind of make you think a little bit differently about stuff. Okay, so we have the Q&A section. If you want to put your questions in there, you're very welcome to. We'll do 45 minutes or so, me sharing some ideas and thoughts. And then at the end, we'll have plenty of time. I always try and leave plenty of time for questions, and I'll try and answer them. If I can't, I will always direct you to someone or somewhere that can. I have been trading for a long time, a couple of decades, but I don't know everything. But I do know a lot of people who can help you. So if I don't know the answer myself, I'll absolutely point you in the direction of somebody who does know the answer. But I should know the answer to everything that I'm sharing with you. Because after all, I design all these webinars. I put them all together, try and download stuff from my brain that I think is going to be valuable to you. Okay, so today, what are we doing today? First of all, let me introduce myself. I know some new people here who haven't seen me before. My name is Mark Holstead. I have been trading for over 2 decades now. In March, it'll be 23, 4 years, something like that. Love the markets, love trading. Also, do these webinars in conjunction with Pepperstone every couple of weeks. So this is a fun thing to do. Helps me keeps my toes. Helps me kind of download some of the things I'm thinking about. Some of the things that I think might help you in your trading. I also do a daily email. Write a daily email that comes out at 7:30 UK time every morning. You can subscribe to that for free at tradersmastermind.com. I think that's it. That's it. You can kind of find more about me if you're interested, but hopefully this will give you enough value today. So before we get on with the topic, I just want to remind you, of course, the disclaimer. Please be aware if you're brand new to trading, or if you're not, understand the risks involved. It's a risky business. We're playing with leverage, we're playing with margin, which does mean that the losses can be accelerated. Obviously, that is also the plus side, means that we can make some decent returns, but it's a double-edged sword. Just understand the game and the business that we're in, especially with trading a CFD or a spread bet product. And if I'm honest, some people just aren't cut out for trading. But if you are, stick around, because I'm going to give you something hopefully today that's going to help you move forward. And by the way, all these webinars recorded. Are they all recorded? Most of them, I think, are recorded. And if you miss some of it and you don't get some of it, want to catch up, you can watch the recording. The recording is always sent out, I think, to people who register. I think that's how Pepperstone manage it. Anyway, you're here live, which is good. Appreciate you for being here live. You can ask me questions directly, and it's just get some energy from you. It's nice doing these webinars rather than just talking to a brick wall sometimes. Okay, if I'm looking over there, it's because I'm looking at my chart, or I'm looking at the questions coming in. Here's the screen where I have the slide. So let's get going. Okay, so build a trade idea generation system. So this isn't system as in some kind of strategy or turnkey trading system. It's a process to run through that you can do repeatedly each time you're trying to generate a trade idea. Okay. Now, Michael Gerber, who was a great author, he wrote the book, The E-Myth, I think. The system is a solution. And why I think this is so important is something that I learned quite early on, and something I've been thinking about a lot recently, in how to adjust and adapt this, is that if we have the same process time and time again that we use to generate a trade idea, whether you're a day trader, whether you're a swing trader, whether you're a scalper looking for clusters of kind of areas to do business, then I believe that if we have a process for that, we can systemize that. It means that we can just improve, we become familiar, we start to see patterns that we wouldn't normally see, and we're just running through this process each time, and it's spitting out the other side, trade idea, no trade idea, long, short, where's get long, where's get short. And if we have this process, then when we come into the trading day or the end of the trade, at the end of the trading day, then the week, however frequent you trade, you run through the process. It's just like if you're a pilot, you go through a pre-flight checklist, right? A pre-flight checklist. You run through it. You know exactly what you're looking for. You know exactly if there's any inconsistencies. Same if we are trading. You want to see is anything not quite right? Anything we shouldn't be trading? Anything we should be trading? Anything exciting? Any supply demand imbalance that we believe we can really get hold of? That's our job at the end of the day, right? I'm a firm believer that the market is a lot of noise, and trying to predict direction a lot of the time is fruitless. Is a lot of random noise out there. However, the traders that do very well, and if you probably look at your own trades, it's when you see an edge, you see a supply and demand imbalance, whether that's a stretch spring you can contract back an exhaustion, mean reversion type trade, or some momentum you can jump on. There has to be something. Right? We're not in the business of predicting, we're in the business of anticipating and then positioning to take advantage of that supply demand imbalance, whether that's a lot of supply coming in, a lot of demand coming in. I'm jumping ahead of myself, but that's the kind of general concept. Okay, so you're doing analysis anyway, right? So why not systemize the process? So what I mean by this is developing this repeatable process that you can just run through and you can just say, right, here we go. I'm going to screen, analyze, and trade the market. This is how I'm going to do it. And you gain more clarity in your method by doing this. It's good if you are a trader who struggles to know whether to hold a trade, whether to kind of just take a level to level trade, I call it, like you're taking, from a support level to a resistance level, you're just banking, cash flowing the deal. You're not looking for a potential runner. This helps you do that. And then further down the line, you may not be in this level yet. That's fine. But at some point in the future, or maybe you are, but at some point, you're going to want to grade your trades because at that point, on a grade A plus setup, you want to push more chips in. You want to be taking more risk. That's just my thoughts on it. And maybe I should mention, guys, that, this is just me, my ideas and thoughts. I never recommend you do anything. You've got to make your own decisions on stuff. But for me, when I'm grading a trade, if I have a grade A setup and I'm so used to doing the analysis the same way, and I go, oh, that's interesting. That's got this variable that others haven't. That to me makes it a grade A. I'm going to allocate more risk to that trade because I know the likelihood of that working is far higher than a lower grade trade. That's something maybe a little bit more advanced, a little bit for the future, but it sets you in good stead when you systemize your process now because you develop that repeatable process. You're going through, you're scanning, you're screening, you've got your filters, you've got your triggers, done. All that process again and again and again. Okay, so let's be smart here, right? We want a process that we can run through each time that just spits out no trade, which is going to do the majority of the time, a long trade idea, short trade idea, or an alert level, which means no trade yet, but I'm going to set some alerts. I'm going to show you some examples in a moment. We're going to run through some together, so from all the process through. Whether you're swing trading, day trading, scalping, it doesn't matter. We want to have that process each time before we pull the trigger. Because let me ask you this. I don't know the answer to this. How many of you have overtraded? I'm pretty much sure that a lot of you are kind of sitting there going, yep, I've overtraded. And part of the reason for that, yes, we have an emotional aspect to it, that sometimes the emotion drags into trades and deals we don't want to take. But often it's because we don't have a repeatable process. We don't know the analysis we're doing. We see something, we go, oh, that looks like it could be good long, and we don't think any more of it. We just hit long. We just get long. And you trade a market order, you get into the trade straight away. Then you work out where your stop should be. Anything, I should put it under a low. And it's a bit of a grubby trade. There's nothing really to it. It makes kind of sense, but there's no real edge there. You're not trading on an edge. You're just trading on a hunch that you've now kind of packaged all these things you think should be right into that hunch. And that's not really going to get you anywhere. To get somewhere, you have to have a process that you go, right, this is how I analyze stuff. This is how I generate my trade ideas. And this is then how I execute. So it's slightly different from a trading plan because your trading plan is, okay, what are the setups going to be? And we're not going to go into that specific aspect today. I've done a webinar, I've gone into that in detail before. This is the process, the flow that we do. Because if you think about, in fact, I'm going to skip to this slide here. Think about companies like McDonald's, right? Awful food, in my opinion, but great systems, right? They're a great business because they have standard operating procedures. And yes, this is all corporate talk. And there's probably many of you who are in that sort of role and you're kind of trying to get out of that by trying to get into trading. I understand there's certain things we can take and learn from these corporations and go, right, they have a standard operating procedure for taking orders, for cooking the food, for delivery, for all the other stuff, right? It's just a process. And they know that if they stick to the process, they're going to get an outcome. Now, for traders, we don't know we're going to get an outcome, a profitable outcome of a trade, which is ultimately what we want. But we know we're going to get an outcome where we know we've analyzed the trade in the same manner each time, and we can improve and improve and improve that analysis side of the business. The analysis side, the execution side, the risk management side, the psychology side, they're all sides that we need to improve. And so when we continually improve and we generate these processes, we're going to come out a much better trader. It's a really key thing to do. So, did I miss that slide here? So, yeah, today we're going to develop you're going to develop with me a 3-step process for screening to ensure you're in the right place. We'll talk about whether you're one market focused or multiple market focused, a slight difference in that, subtle distinction. Analyzing to create your trade filters. So, what are the things you might look at to say, hey, that's a good trade idea? And then coming up with a trade idea, the final part and the trigger for that trade. Because I think a lot of people fall into this trap. I've done this before. And when I stopped doing it, things started getting much better. Rather than just market ordering into stuff, rather than just taking a trade as soon as I see it, hey, what price do I need to see? What level would be a good place to initiate this long? What pattern would I need to see would be great? Would I want one more flush and then a pop through? Do I want to see the market pop and reverse? Do I want to hold back for a $10 pullback? Do I want to get in right now? Do I want to wait for what do I want to do? How do I want to plan that? How do I play this game of chess rather than just diving in and seeing a trade and seeing the market move and going, ooh, market order, market order, market order? Because that's what the mob does. That's what the crowd does, and the crowd doesn't get the results they want. We have to differentiate ourselves from the crowd by being very careful how we come up with a trade idea, how we come up with the process, and then how we come up with the triggers we need to execute the trade. It's your hard-earned capital. You're risking your hard-earned money. So you want to make sure that the risk you put in, the chips you put on the table are going to give you the best possible chance of success. And if you're on demo at the moment, treat it as if it's live. Repeatable process you can choose time and time again. We want it to be efficient and effective. All right, McDonald's, talks about McDonald's. Starbucks, think about all those big businesses. They all have these systems. And I'm not saying that we emulate that, but I think systemizing something that we can do is repeatable, a process is good. Now, just let me sidetrack differently. I just thought of this. If you were training a trader coming to work for your fund and you said, right, this is what I want you to do, you'd want to encourage them to have their own agency and their own autonomy and their own methodology to trade. But you would also say, hey, I want to see a process that you stick to time and time again. I don't want you just bringing up a silver chart and going along because you fancy it. I want to see why you took the trade. I want to see the reasons behind it. This is taking trading seriously. It's like taking things up a notch rather than the kind of click and spray and pray type of guys. Okay, so step 1, screening. The objective of this, ladies and gents, is to recognize that we're all busy, okay? Some of us are dedicated 100% to trading all day. Some of you are working. Some of you have other things going on, family lives, whatever it is, right? Life's life. We've all these resources, and they're finite, and they're limited. So the idea of a screening is to say, regardless of where you sit on that sphere, identify where we're going to allocate resources, because we want to first of all decide if the market's even worth looking for a trade. Is it even worth looking at? Now, you might be a trader who focuses on one market. You still apply this approach. You might be someone who likes to scan 10 15 pairs, 5 pairs, currency pairs. You do that. You might be an equities trader, whatever. The screening still is like, should I even dedicate time to trying to look for a trade? Because how many times have you done this where you've seen a market doing nothing and you've tried to look at a trade and you've squinted and you've made it done? You're going, well, is that a bull flag? Is that a flush? Is that liquidity? You start to kind of find these little reasons to take the trade, and you're in a trade that you really shouldn't be in. So the idea of this is to say, right, should we even continue to the next phase? If we shouldn't, then allocate that time to something else. If you've already allocated the time to your trading, then you can say, right, that's time. Well, time spent trading is time taken away from studying, from looking through my journal, from maybe reading a trading book, from any other things that you should do in the pie chart of trading progress. So let's not waste time. If it's not valuable to us, let's not waste time. We're only going to go down the process of analyzing and coming up with trade ideas in a market that we believe is conducive to trading. There is supply, demand, and balance. Okay. So first step for screening is to choose a primary filter to decide if you should spend any time digging deeper. And this is really key. Take nothing else away from today. Just default settings should be no trade. Going into it saying, my default is no trade. I need to be convinced by a good chart pattern or whatever else. We'll look at some other things as well that are going to convince me then to actually allocate some risk capital to this trade, or at least even look to allocate risk capital to this trade. So our job now is to screen, to either pick the best market if you're a kind of trader who likes to look at multiple markets, or to say yes or no to the market of choice. So if you're a DAX trader, you're a FTSE trader, you're a Dow trader, you're a NAS trader, you want to look at it and say, right, do I even want to trade today? Do I even want to get involved? Whether you're a day trader, swing trader. So how do we do this? So ideas, okay, what I'm going to do is I'm going to present to you ideas. I'm going to go through a kind of example in a moment, but I present to you ideas of how you can kind of screen yourself. Maybe you screen for volatility. Maybe you screen on the average true range. If the average true range is not above a certain level, you don't want to trade it, whether you're intraday or day or swing. Has there been a news catalyst? Some people like to trade only when there has been some kind of catalyst. There's been earnings. There's been some sort of central bank announcement that has caused a move. You look at USD JPY or GBP JPY, any of these pairs that are associated with the yen, they're moving because there's been some sort of news. Maybe that's how you like to specialize. There's been earnings, higher time frame chart. Maybe that's important to you. Do you want to see that in fresh air? Do you want to see it have some sort of pattern? If you're an intraday trader, distance from the VWAP, if you like to use the VWAP, distance from the opening print, position in prior day's range, all this type of stuff, you say, right, do I even want to consider a trade or not? And if the answer is no, fine, allocate that resource that you were going to use for trading and for executing into something else, for improving, for researching, for going through your journal, for studying a strategy, for doing some little back testing, for exporting some stuff into Excel, any of these bits. This is all stuff that's going to help you move forward. Okay, examples here. A couple of examples, guys. Got a daily chart on USD CAD, and I've got a 5-minute chart on SPY. Look at USD CAD. In my opinion, at that point in time, I think it was yesterday I took this, doing nothing, right? It's been doing absolutely nothing for the past multiple months. You could argue with me, oh, it's this and that and the other. No, I'm not having it. It's doing nothing. It's sitting in a nothingy range. I can give you just as good argument as going lower as it can going higher. And if you've got a trade on it now, fine. But I'm not discouraging you from taking the trade. But I'm just saying if you're screening this and you're a swing trader, this is this type of trade, a type of chart that you'd be like, there's nothing going on. Especially as well when you've got Fed coming up. Well, why not wait and see if that spices things up again, if this is your market? There's no point in trying to just guess stuff. Guessing just draws us down so much. It takes away all the good stuff we do. We're taking these guesses, you're like, oh, I think it's going to retest the high in it. Maybe it goes and comes back. You don't have the confidence. No good. Same with this 5-minute chart of the S&P 500. I'd use a SPY ETF here. Same thing. If you're trading Pepperstone, it's US 500, they call it. But basically, look, it's doing nothing. It's just sitting there during that day whenever it took it 11th, sitting there doing nothing, hovering around the VWAP. Hardly no one cares, right? Nobody cares. Whereas people do care about this. If you're screening, hey, look at USD JPY. This was obviously a couple of days ago when I did this. We're now trading in way up higher. Same with the SPY. There's something interesting happening. Whatever that filter is for you. And if we go back, is it volatility? Is it eyeball higher time frame chart? Is it distance from VWAP intraday trade? Something. I urge you to do this. I urge you to have a screen that just says, right, yes or no, do I even consider trading? Doesn't mean you trade it. Do I even consider it? And if I'm looking at this and I'm like, hey, I'm a USD CAD trader, I'm not trading it. Doing something else. I'm going to learn another. I'm going to put my effort elsewhere because we've all got the same amount of time. Some of us obviously spending more resources in front of the screens, but the point is you can allocate that to something that's going to move you forward rather than wasting it in nonsense markets. And you could use FinViz as well if you wanted to screen in that way. And there's also a screening tool. If you want us to screen by volatility, you go into TradingView. You can easily do this by 3-month performance, 1 week change, 1 month, whatever. You can play that game. However, don't complicate things, but just have a rule that says I will not even consider moving to the next phase until my screening criteria has been met. No trade should be your default. Think about how many times you've forced a trade, hasn't worked, you've regretted it, you've gone in drawdown, maybe even trade on tilt, just doesn't serve you guys. Okay, step 2, analyze. So now we've passed the screening process and we go, right, I want to trade this market. This market looks juicy. I'm ready to rock and roll. I think we've got something here. Let me now allow myself, and just pause for a moment and sidestep. It's just standards as a trader. If you value your time, you value your energy and value your effort, you are saying to yourself, I'm not even going to waste my time analyzing a dud chart. I'm not doing it. I'm going to allocate the resources elsewhere. Whereas if you say yes, now you take it a bit more seriously. Okay, this is quite a juicy chart, or this has got a catalyst, or this has got whatever that parameter is for you. Now I'm going to run through my analysis process. So we're starting to build this system. We're starting to build this repeatable system. Nothing gets through to the analysis section of your brain until it's past that filter. So now we're through step 2, develop a step-by-step analysis process. So again, I know it sounds like I'm a bit of a lazy, avoid wasting time. I'm not, and I urge you to think the same because I believe it's effective. Be very mindful and about where you're allocating your time. You don't want to be overanalyzing something. Obviously, there's a time issue. If you're constantly looking and wasting time analyzing, you're going to second guess yourself. You're going to overthink. You're going to hesitate. You're not going to feel confident to pull the trigger. So just take your time and look at the most important pieces of data. And the idea of this is we want to avoid biases and we want to avoid useless data points. So, example here, screen for news, economic calendar. Check your high time frames, underlying trend, price action, theme. Going to run through example in a moment. Supply demand imbalances. So your first port of call is going to be what's the news coming. Now, you might not be a news trader, fine, but you absolutely should, I believe, have an eye on the news. You follow Pepperstone, of course, they'll give you a great week ahead, what's going to happen, what's moving the markets it's on what do we call it now, X. They said Twitter, you know what I mean? Follow that, or there's multiple other resources you can check for economic data. Now, what's the point in that? One, is it going to make sure you're not in a trade when news comes out? Two, it's going to affect the volatility of the market. Today's slightly different and unusual. Why have I got balloons? I don't know why I've got balloons on Zoom. If I just saw my balloons then, I don't know. Zoom does some funny things. That's strange. I get balloons again. No. All right. No balloons. Maybe it's celebrating Fed. Anyway, yeah, if you can basically say, right, there's got to be a filtering process. I just need to double check news. Is there any headline event risk coming up? Is there anything that's going to affect the potential volatility of the market I'm trading, i.e. negatively? Are they going to contract the volatility because I'm expecting something coming up later on? Or is it going to be headline risks going to cause volatility? Or has news gone, which is impacting the market I'm looking at? Okay, so run through that quickly because this is the slide that's important. And I love this phrase. Ask yourself this question when you're looking at the chart. Does anyone care? And you're like, what are you about, Mark? What do you mean, does anyone care? Is there supply-demand imbalance that you can take advantage of? And what I mean by this is, and we'll look some examples in a moment to hopefully make it clear. How many times have we got involved in a market where nobody cares? Longs don't care where it is. Shorts don't care. Nobody gives a you-know-what. Nobody cares. I went to swear some with Pepperstone. Nobody cares, right? Nobody cares. And so you're trying to guess. You have fallen into the trap that many traders fall into. Sir, step this way. It's a guessing machine. You can guess and you can pay to play and you can try and guess and there's no edge. Right? You're trying to guess something that has no supply-demand imbalance. There's no edge. There's no inefficiency. We're in the business of taking advantage of inefficiencies and supply-demand imbalances on a short-term, medium-term. Not many of us are long-term, but that's what we're looking at. And so when we see big trends and momentum, we're looking for those pauses to jump on. And we see a stretch market. We're looking for reversals. We're looking to take advantage of that because that's the edge we have. We're not macro experts. We're not trying to predict and all this other stuff. That's not our job. Our job is short term, grab that opportunity, supply demand imbalance. I can ride that wave, jump off. That's the way we need to look at this. And so sometimes the most obvious, simple filter when I look at the chart is, hey, does anyone care? Does anyone care? Example, we'll go back to that. Who cares about a chart on the left? That's USD CAD. Nobody cares. What I mean by that, does any long care anywhere? Maybe a long here is slightly excited, but they don't really care. They're not in massive profit. Does a short really care? Probably not. A little bit different from this. If you short into the hole here at 146 on dollar yen, you do care. You're like, oh, I might be wrong. And it's causing a supply demand imbalance. There's news coming out. There's lots more people who care about this than there are this. And again, that's subjective. That's something you've got to decipher and understand for yourself. But that's a really good filter. A really good filter. Who cares? Even intraday, if we go back to that S&P chart, it's flat. Who cares? Longs aren't trapped. Longs aren't excited. Shorts aren't trapped. Shorts aren't excited. No one cares. We need some more juicing. We need some higher time frame. We need some firepower to get this thing away from the VWAP get this thing breaking a high, get this thing extended, get someone caring, because when people care, they put emotional order flow. There's order flows based on all sorts of different reasons. We get the stretch spring, the supply demand imbalance shifts. So that's a really, really easy, simple filter. Does anyone does anyone care, right? Great way to look at things. Okay. So chart process. Now, it's not a webinar on how to analyze a chart. I think many people know this, and I think I've done something similar before. But as an overview, a brief overview, or rough overview, should I say? For time, we're good. Higher time frame check. So check your higher time frame. I believe that everything should stem from that. Now, there are certain exceptions. Perhaps if you're a really hyperactive scalper, you kind of don't care what the daily chart is doing. For some aspects, you do in a way, if it's kind of dipped below the prior day's low and you're scalping that inefficiency under the low and firing into the stops, then understandable, yeah. But most of the time, you want to get a roadmap. What's the higher time frame doing? Who cares? Recent days action check. Was it a big trend day yesterday? Was it a very, very narrow range day? Did we close at high? Did we close at lows? This is I'm running through this probably quicker than I should, but this is part of the process that you repeat again and again and again. This is maybe the most important part for you. It's like, hey, I want to look at this. I want to look at the prior day's action. I want to look at the overnight price action, or the Asian session, whatever session you trade. I want to look at where we are now relative to the prior week. Is there a technical pattern forming? Have we done a double bottom? Are we flagging? Have we trapped some people? What's the volatility component, the ATR? You build your own here, but this is, again, just like your pre-flight checklist. I keep messing up, don't I? I learned to fly many years ago. My license is expired now, but you would do this like an old-fashioned clipboard, spiral kind of binder, and go, oh, I need to check the wheels and tires. I need to check the fuel. I need to check the wind condition. I need to check all the controls are free or not impeded, or whatever stuff it was. But that's trading should be that too. What's my higher time? Because this is the reason you do this, and the reason you do that, and many people do this as well in other businesses and worlds and sectors, is to catch things that could catch you out. I remember my instructor at the time, we kind of, in this rickety old bloody plane thing, two-seater thing, and you have to kind of move the ailerons and move the yoke back and forth. And like, why are you doing this? Because, well, actually, this came from, you don't want to see if it's jammed. You want to take it all the way back, all the way forward, and full range of motion. Why? Well, actually, there was an incident many years ago where a mechanic had been working on the plane, not that specific plane, but a plane, and he left a spanner in there. And basically, the guy was taking off full throttle. He was about to take off, and he couldn't pull the he couldn't lift up the he couldn't I don't remember the terminology, been so long. He couldn't take off because he just couldn't move the yoke back strong enough because it was being jammed by the spanner. And so now you check. So it's the same kind of thing with trading, right? You want to just double check there's no news. Just double check the higher time frame not doing nothing. Double check the price position prior. These are things so you don't get caught out. Like, prior day, big heavy trend day. Do I really want another trend day today? Am I really? Yeah, okay, right. And so it just helps you calibrate. And it's calibrating. And the idea, again, going back to the initial point, ladies and gents, is that once you do this and you do it again and again and again and again, you see the same thing, you see the same movie, you do the same analysis, you conduct the same process, you become an expert in that process. And so when those real gems, those real beautiful trades just stand out, they're just there, and you just go, that looks different. That looks good. There's something about that, because I've done this time and time again. That looks good. This is a grade A. This is one I'm going to allocate more risk capital to. Or the flip side, there's something about this, I don't like it. I just don't like it. And honestly, you do it more and more. You allow your intuition to build. You allow your gut to learn and improve. I'm a big believer in that. And having consistency in your process allows you to build intuition. You got to be careful. You're a new trader. You don't just have a gut feel and go, oh, like a horse race. Oh, I think red rum's going to win. Oh, I think this. No. You want to have this repeatable process. That's when the intuition builds and goes, you know what? Something about this, I just don't like it. And sure enough, bam, market just disappeared. You go, oh, I was going to take long on there. I was going to get ripped. My face was going to get ripped clean off. It's like if you're driving, right? You just know you're driving along. You're like, that dude is going to pull in front of me. I don't know why I know that, but I know that. You look at the car type, you look at his road positioning, you look at his speed, there's all these little things you take in, you're not consciously, sure enough, so you back off a little bit. Sure enough, off carved up in front of you. You know, you're like, I knew you were coming, pal. I ain't gonna sit on the horn. I'm gonna let you go about your business because I knew you were coming over. Same thing with this. And the only way you do that is by repetitive process. Repetitive process. This is why I think this is such an important tool to, and task to learn, a skill, should I say, to learn. Okay, so let's do one together. This is gold. This was a couple of days ago, actually, where we're sitting now with gold. To make me look like a fool, probably does. Doesn't matter. It's just an example. Sitting exactly where it was. Okay, gold. Not a recommendation, of course. This is just an example. It happens to be a recent example. Does anyone care? That's my primary filter. And I've already gone through and I've already screened and gone, yeah, you know what? This is moving. Past my screening filter. ATR is pretty decent. Okay, we're out of the trend. We've had some news coming out. Okay, I like it. Rally since March. This is good. This is good. 1st of March. This is good. Okay, filter or question, should I say? Does anyone care? Yes, they do. What do I mean by that? Long as they're very, very, very profitable, they're very happy with this. Shorts are hurting, right? Someone cares. Doesn't matter who cares, and we can overanalyze that all we want. But this people care about this. This is in the headlines. It's moving. There's money sloshing around in this. So the likelihood is there's going to be some sort of action. There's going to be some sort of inefficiency. Trend is up. Check. New highs. Check. 4-day high tight flags. We're forming this high tight flag. Markets in play. $24 ATR. Okay, these are just examples, right? Now I'm like, okay, I'm happy to consider a trade on this. I'm happy to take it to the next level and consider a trade. Versus if we go back to that USD CAD, yeah, come off the low, maybe reverse a little bit. Ooh, yeah, could it go up there? Could it go back there? There's a 50% retracement here. You don't really know what you're doing. You're kind of guessing and second guessing stuff. So does anyone care? Yes. And like I say, it's not a trade. This is not something that we're kind of going to do, but the process of it all. Okay. So now I'd go to the hour chart and I go, right, I'd start to think a little bit and go, okay, yeah, maybe some people got trapped below support there. Maybe that little dip below, I like that. I generally like that from my personal perspective as a trader. I like to see a little dip below that fails and rallies back up. Okay, so am I bullish on this? Yeah, I'm probably bullish. I'm probably bullish on this chart. I don't think I'm bearish unless we started getting back under here and failed. But at the moment, seeing what I see, maybe we're due another pop. Maybe we'll get to 2200. That's my thinking, my process. But I start to frame it as a flag on the daily and go, okay, thesis, extension to the high side, bullish, in play. That's enough for now. Recognizing we've got news coming up later in the week, tomorrow, and we've got stuff that may well influence this. So I'm also aware of that. But let's imagine we didn't have that for now and just go through this process. Okay. So now I've done that. I've passed it. It's gone through screening. The daily chart was good. That was my primary filter. I've now looked at it and said, okay, here's my filters. It's moving. Does anyone care filter? Yes, they do. And that's honestly such a simple thing to ask, but it'll keep you out of some of the crap stuff. Now, trade idea generation. The market's in play, the supply demand imbalance, we can potentially capitalize on it. Now, could the market just sit there and do nothing for the next 20 days? Of course it could. Could it reverse, rip down to 2100? Of course it could. Of course. This is why we manage risk and the other aspects of our trading have to come into play. But we're starting to go, the point of this is the process, the same thing again and again and again and again. So we become damn experts at it. That's what we want to become, experts at the process. Okay, so what's the trade idea? What's the broad thesis? What's the counter argument to the thesis? And where might be a good place to express the trade? Try to get out of the habit of seeing something and buying at market or selling at market. It's a bad habit. I can't promise anything, but I would wager that if you had gone back on your prior trades and you just waited for a little bit longer, you waited for some sort of pattern, you waited for something, retracement, you would have much better results. It's that urgency we feel. I'll tell you what happens in our brain. Let's sidetrack a little bit. So we see something and we go, yeah, it's going higher, that. And then all of a sudden, something kicks into our mind that goes, I don't want to miss it. 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 We don't necessarily as panicked as that. Hopefully you're not. But that's the conversation that's going on internally up there. And so the logical fix to that is to open the ticket and get long now. And that soothes that I'm long. It's nice. I'm long. I feel good now. I'm not going to miss it. But that might be a really rubbish entry. You might have the broad thesis of it's going higher. Fine. But is that the best place to express the trade? I remember years ago reading, or actually listening to an Audible, the hedge fund market wizards. I think it was the hedge fund market wizards. Market wizards series excellent, by the way. If you don't know about the market wizards series, Jack Schwager. But on one of the guys there was saying, you know, I had this idea, I had the thesis that this market was going high. And this, bear in mind, these are hedge fund guys, so they had a kind of longer term vision on stuff. And he said, I just couldn't find a way to express it. And I thought, I remember replaying it, going, what's he on about, Rich? And I thought, you know what? That is really interesting. He's got a real feel and idea, and everything that stacks up to this moving higher, whatever asset class it was, but he couldn't find a way to express it. And now for him, that was he couldn't find something liquid enough. He couldn't find an options contract. He didn't want to, whatever it was. But I thought, how does that apply to me as the trader? Well, that applies that actually, what's the best price to get in at this? Where's the best place to express this trade? And when you start looking at trade ideas and your trade idea generation process through that filter, you start to then say, very rarely is it just hit a market. Now, okay, now and then, maybe. But if you can reduce that and you can plan and you can be careful and say, hey, I might want to see this, this, and this. Don't want to see a higher breakthrough high. Don't want to then, buy that breakthrough high. Don't want to see a high, then retrace. Is there some sort of pattern development that I want to see before I'm prepared to allocate risk capital to that deal? That's the way you should be thinking, I believe. And playing a game of chess, I always say play chess, not checkers or drafts, wherever you're from in the world. Anticipating, not reacting. This is what the best traders are doing. They're not just diving into stuff, market ordering thing. Yes, there's a time and a place for market order. I appreciate that. And if you're dialed in and you're scalping, then maybe. But if you're coming up with a trade idea for the day, intraday, for a longer time frame, this could be a real help to you. What's the broad thesis? What's the counter argument to that thesis? Always have a little narrative going on saying, okay, maybe you're bullish. What's the bearish counter argument? Well, we've seen the flag a little bit too long. We've got this and that. Just think about it. Don't confuse yourself, but don't reinforce the idea of it's going up, it's going up, it's going up, no matter what, because markets rarely do what we want to do all the time. Okay, so let's go back to analyzing this dollar gold chart. So ideas we could have. Okay, we've already decided we want to trade it. We've already decided we're bullish. Fine. And again, hypothetical. This is never not trading recommendations when it's not what we're about here. It's about the process, developing a system that you can operate for life, as opposed to, I think this market's going to go higher. Okay. So ideas. You could buy a break at this high. You could wait for the close of the day to close up here. But I took this, it was halfway through the day, hadn't quite closed. This COMEX spot hadn't quite closed. Do I want to test of lows and take a double bottom and look for a buy up there? Don't want to test the lows again, come back up through that low, buy there. What about $10 pullback? All these things should be, this is advanced. This is where you separate yourself from the pack, right? When everyone else is just buying blindly and going, this is where you think strategically and go, what do I really want to see? And how would that impact my stop? How would that impact my target? How would that impact the risk reward ratio of the deal? All the things need to be thought about. This is intraday. So we're not saying this is just for, higher time frame traders. So we start to come up with an idea, and hypothetically we might, risk parameters, stop loss targets. Is it a level to level trade or is it a runner? So do I want to kind of go just back to highs, reasonable, back to that high? What do I want to do? Or do I want to hold it and think we're going to kind of blast off into the stratosphere? That's the decision to make. And a grade of a trade. Is it a great trade? For me personally, and again, never recommend anything, this is not a grade A trade, because there's not really a big catalyst. Okay, you could argue there is, but there's not really something that's shifted things. Maybe tomorrow will change that. But anyway, technically, it looks okay, right? So risk parameters, where would I put my stop? Where's my target? Am I running this, or am I taking a level to level trade? So let's say we decided on a $10 pullback, i.e. $10 from that high. I don't think there's massive momentum yet. I still think on the daily chart, we're kind of nicely stretched. I feel like the bull flag's valid. All these things may be running through my mind. But actually, I might say, you know what? We've run quite a lot from the low to the high. Let me just let it come back $10. I still feel it's contracting and expanding as it's kind of worming its way back up to the high of the range. That might be my thesis. And that, by the way, is why I didn't class as a grade A trade. But let's run through this example as a kind of recent example. So what do? I'd say, okay, I'll buy it on a $10 pullback. I'll kind of put my bid there. My stop can be a little bit wider, maybe on this low. I don't really want to be in it if it's under that. One more test, fine. So I'm kind of thinking strategically about that. Where's my target? Well, you know what? It would be okay to kind of have first targets at 2190. Do I want to look for 2200? This type of thinking. So now you're becoming more professional and more, I've got to be careful using the word professional. Professional clients or retail clients are very different, but you're thinking more, you're leveling up the way you're approaching the market, the way you're thinking. Okay. So that might be a way you approach it. You go, okay, I'll buy a $10 pullback. You're anticipating, not reacting. So you've agreed with yourself and you believe that there's a, you're going to have a lift in price. You're bullish, fine, but you're not just diving in. You're waiting and you're waiting. And that just helps you think. So if we go off gold for a moment, by the way, what is it today? It dipped down to 21.51, I think. And then just kind of popped back up to where it was, 21.56. So it's just doing nothing really. But I guess if you kind of just dived in, like here, you'd be sitting there going, oh, I've got $10 worth of pain. It just ruins the structure of the trade. And that doesn't always happen, of course. Okay, let's keep moving. So what would make you enter the trade? That's the question you want to ask yourself. E.g., after one more leg lower, do I want to see? Do I want to see? I love these. When we have a big leg lower, the price then goes to the prior day low and pops back up. That's great. I really like that personally. What would your risk parameters be? Your size, your stop loss? How will you manage the trade? Do you want a trailer stop? Add to the trade? This is kind of more trading plan type stuff. This is a big one. Consider a target first approach or a stop first approach. In other words, maybe I should do a whole thing about this because I think it's so valuable, but let's touch on it now. Stop first approach means, right, I'm bullish. Where's my stop got to be? Okay, my stop is, hypothetically, my stop has really got to be here, 21.40. That's really what, so, okay, where do I need to get in to make this work? I can't be buying at 21.70. It's too high, too much of a stop. My position size is going to be so pathetically small that unless I'm looking for 3,000, I don't want to take the trade. So reverse engineer it back from where you believe the stop should be. So if you believe there's an effective bull flag that's going to carry on higher, then very reasonably, I guess, your stop would be there, right? Maybe it's a bit lower. So you reverse back and go, well, actually, I really need to buy it at 21.50 to make that worthwhile. So that's going a stop first approach and reverse engineering from that. Or a target first approach, which is personally one of my favorite things to do, is to think, where is this price likely to go? Okay, so how do I want to get into that? Do I want to buy at highs? Do I want to do this? And think, right, I think price is going to hit, let's say hypothetically we thought it was going to hit 2,200. Okay, fine. So where would I get in for that? Do I want to see a break of this high and tight stop? And thinking it like that. So sometimes the lens that you put on, the glasses you put on, changes the way that you look at the market rather than the generic way of, oh, this is that, I want to do it from here, this point now, and try and structure a trade from this point now. Think about what the target's likely to be or the stop's likely to be. It's a different way of thinking and can really unlock, some really good trades and balancing discretion with a structured process. Okay, so just a summary of what we've done, what we've covered, and we've run through quickly. I appreciate that. And some questions I'll get to in a moment. Thank you for those. If you've got any questions, slap them in the Q&A. Screened, use one primary method to screen the market. Should we even allocate resources? Your time is precious. And by the way, I appreciate you coming on tonight, the webinar live. I do appreciate that. Thank you, and recognize your time is valuable, just like it should be on your market. Should you even bother trying to analyze something that's sitting there doing nothing? Chop and stop will kill you. Don't even let it go to the next process. Like, you know what? This damn thing's sitting around doing nothing. I'm going to do something else. I'm going to read my trading book. I'm going to do this. I'm going to do that. That's what should be happening. If it does pass through the process, or you do find something you want to allocate resources to, good. Get your process now. Analysis. We talked about the data, the higher time frame, the recent price action, the ATR, which is like a volatility component, the pattern, and the thesis. There's your analysis section. And by the way, at that point, you can still go, you know what? I don't like it. Let's go back to gold as an example. You might go, you know what? It feels, I mean, it's bullish. It's kind of rallied a fair bit. But it's kind of sitting there for a few days. Well, not for me. I'm going to pass. And that is perfectly the right thing to do. And should be the default setting. Not for me. I feel like it's run up enough. It's a really big asset. It's not like we're talking some sort of penny stock here. It's a massive, massive move. It's probably quite stretched. I kind of look at it again if maybe we get down to 2,100, or I'll look at it again if we get to 2,200 and see if there's maybe a short exhaustion opportunity. That's fine. That's absolutely fine. And I'd be like, yep, you know what? That's good analysis. I think that's fair. So you don't have to kind of come up with a trade idea at any point. But if you do, what's your thesis? Now your trade idea generation. So you dunk, next step. The idea, what's the idea? Long. What's the counter to the idea? Well, could use those examples. We stretched quite a bit. It's quite a, gold. It's not like we're looking at something small. It's gone quite a lot. Yeah, it's kind of stagnated a little bit now. Ooh, fine. And you might still overcome, it might still go against that, but you need that kind of counter argument. What's your trigger pattern? We get some examples of that. Breaking through high, pulling back $10, retesting the low. What is it? That's key, that bit. That's so, so key. Such a valuable part of trading that people miss out. What's your risk on the deal? What's your stop? What's your target? And how will you manage a trade? We didn't really talk about that, but are you going to trail the stop? Are you going to add to the position? Are you going to try and maximize the position? What are you going to do with it? That's really important. That's a whole other topic, but it has to be there. Again, we've built this process out now. It's methodical. We know what we're doing. Bang, something comes in at one end, comes out the other end with a trade idea or not. That's it. And the things in between is how we get better. So how do we get better? What now for you? Document and label your process. It can be super simple. It doesn't have to be complicated. There's version 1.0. Adjust after week 1 to version 1.1, 1.2. I don't need to look at this. I should do this. What's my process for analyzing? Every single day, I run through that. Trade idea comes out the other end, or don't trade it at all. Then make some big changes after a month. It's a version 2.0. Embrace the process because it just removes a lot of stress. If you know, hey, I'm trusting the process to generate the trade ideas for me. Of course, there's so much more to do and so many more things to add to trading. But if you can systemize something that you're doing anyway, you're doing something that is just, I'm checking this, I'm checking that. You're doing it. So why not systemize it so that you can get better? And like I said before, the more you do it, the more you develop the intuition and the more stuff stands out at you that is valuable and go, look at that thing, man, it's ripping. There was a catalyst for that. It's pullback. I saw this before. This is a real good one. The risk reward really good on this. Man, I'm going to put some more chips on the table. Or you know what? Oh, the gold's been sitting there for a while. I've seen it. So I've seen it just fizzle out and just go to nothing. I'll leave it. And only by doing that repeatable process allows you to tap into that sort of core part of the brain. Okay. Little shameless plug for my daily email, free daily email, 7,000, 8,000 almost now subscribers on that. Send out every day, 7:30 a.m. UK time. Think you will find that valuable. If you've enjoyed this webinar, you'll definitely find that. You go to tradersmastermind.com and you can select daily email and sign up for that one. Okay, let me have a look at Q&A. Thank you, ladies and gents. If you are leaving us now, I thank you for your time. If you're hanging around, appreciate you. Okay. Gary, agree, a large amount of short-term random noise. Yes, Gary, and that's and you know what? And Gary says here, I don't think it's a response to my comment about there being a lot of noise in the markets. Honestly, that's the markets. There isn't edge all the time. There isn't edge, especially for retail traders. Sure, if you're running bloody Renaissance, firm and you run an HFT firm, fine. We're not doing that. Our job is to just risk capital on the asymmetrical risk reward trades that we believe are asymmetrical risk reward on things we've seen before, and having that in your mind and going, I don't need to catch everything. And a lot of it is noise. And if you have that at the forefront of your mind, that helps you go default no trade. This is noise. I'm not getting sucked into noise. I refuse to get sucked into noise. To me, it's like, if you're trying to lose some body fat, right? Or you're trying to get yourself a bit more shape. You go into the supermarket and right in front of your eyes, you've got like chocolate, you've got snacks, you've got Pringles, you've got all this stuff, and it's like boom colors, and it's like buy one, get one free, and all this, and it's really low price. And you just like, you've got to go, whoa, hang on a second. I'm not getting sucked into doing that because you're, advertising all this nice stuff. I mean, it's right in my face, and I like the taste of it, but it ain't good for me, and I ain't taking it at the moment. And it's that battle you've got to have, and that willpower in the trading day to go, you know what, this is chop and slop. I refuse to allocate risk capital to this tosh. I'm not going to do it. You guys can all go play. All the people who just play in that stuff, you're fine. I will just back the winner. I will wait until we kind of show something that's valuable, and then I'll get involved. And having that mindset, Gary, is so, so valuable. It sets you apart from the pack. The pack is getting involved in all the stuff. Being back there, oh, it's this, it's that, and they're trying to analyze it and overanalyze it. No, it's not. There's nothing happening. It's a pure 50-50 punt. And that's not what we're in the business. We're in the business of waiting until we see something, a pattern that we've seen repeat itself. History has proven this pattern has some sort of edge. Never guarantee, but some sort of edge. It's an exhaustion play. It's a momentum ignition play. We've seen these before. We've seen that these can work out, and we've waited for it. We see it. We get the opportunity. We come up with the trade idea, and then we strike. And if we can do that again and again and again, it works out in the wash. The process, the score will take care of itself. The process is how we get to that point. What book did I mention about systems? What book did I mention about systems? FK. I'm trying to think. I mentioned Hedge Fund Market Wizards. That wasn't about systems, I don't think, or was it? Maybe it was not about systems, but it's a good book. Gary says agree regarding Canadian dollar. Yeah, a waste of time. I had to read the live captions the whole session. Tested the speakers. All was fine at my end. I think it's your end. Sorry, Anonymous, to say. I think it's your end. Everyone seemed to have heard me okay. I would have got flooded with stuff. People saying, I can't hear you, can't hear you. Sorry about that, Anonymous. Maybe you can. You can't even hear me anyway. So, the captions are going to be interesting. If it's I've been talking quick and they don't really work very well. So the quicker I talk, the less likely it is you're going to be able to read this. I'm kidding. The recording should come to you at some point. If you're registered for the webinar, Mr. Anonymous attendee, they will come. Okay. Jacob says, hi, Mark, and thank you for another great webinar. Thank you, Jacob. Appreciate it. Do I have to start with the daily chart with this top-down approach filter method, or could I start with the 1 hour and work down to 1 minute when doing this gold example you talked about? Jacob, I would recommend, and I never recommend, got to be careful in recommending. For me, and everyone's different, I start with not 1 hour at all. I start with the daily chart because I just like to see. That's important, right? People who are reading the FT, they look at the closing prices. Then that's in the news. That stuff matters. The hedge funds don't really care about the hourly. I mean, they kind of do, but the bigger players, higher time frame players care most about the daily close, daily high, daily low. It's important. So I would always do that. Even if you're skipping, someone starting off the daily, just get a feel. What are the big players thinking? Who cares? And back to that point, who cares? Is it in people's minds? Are they sometimes trapped? Are they hurting? Is it euphoria? Is it despair? And there's something emotional being stirred in people. So definitely start on the daily, and then go down to your 1 hour, and then go down to your 1 minute. That'd be the way that I would do stuff. Victor says, not a question. Big thank you for this one. Appreciate that, Victor. It was a Gerber book. Oh yes, sorry, FK. It was E-Myth. No, it's not trading related at all. It's about systematizing startup businesses. So he talked about going from a kind of solo operator to a business, and how that the transition becomes developing systems and developing processes and putting people in place. So it's definitely not a trading book, but it was interesting that actually you look at McDonald's, look at Starbucks, you look at Five Guys, you look at all those fine establishments, they're just very, very systematized, very systemized. And that really does help them. And I think, okay, we'll take stuff from that. How can we systemize and become, more elevated in our own trading? Thank you, Peter. I should have read this waffling on. You've already answered the question. I appreciate you, Peter. Mark King says, thank you so much for enriching webinars. I really do appreciate. Well, I appreciate you, Mark. Thank you for attending. I appreciate anyone attending. You were on a Tuesday evening. You've probably got other things to do. So hopefully it's been valuable to you, and we'll call it an evening there. I actually have another one coming up next week. The schedule is a little bit unusual, but next week, if you're a part-time trader, you like this one. We'll talk a little bit more about swing trading strategies. So some of these strategies that maybe you haven't got time to sit in front of the screen all day could help you kind of still get. I've got fireworks now. I've got fireworks now on Zoom. I don't know why that's happening. It's funny. I know if you guys can see that. It'd be embarrassing if I can see these fireworks and you can't. Balloons before, now fireworks. Anyway, if you're watching this on recording, that will be up as well. If you're live, join me next week. Appreciate your time, ladies and gents. Thank you so much. Keep your risk managed, and look forward to some data coming out tomorrow. See you soon. Bye-bye.